Welcome back, everyone. This is another episode of the Anatomy of the Trade. Today, we're going to look at two trades. One of them was submitted by one of our students, Dimitri D, and another trade is just the most recent trade in Russell 2000, or rather the first ETF for Russell 2000 that France has conducted. So let's start with the trade for Dimitri. This was MAXR Technologies. And wow, what a great trade. I don't think that I'm going to have a lot of comments here. So, I mean, Franz, how would you view this setup before the trade? What catches your eye?
I think Dimitri has done an excellent job in delineating the support and resistance of the trading range that was the cause building area for this trade that he entered, and recognizing the correct place after the trading range breakout occurred, not to get in right away, wait for the backing up action, identify that properly, and I think he gets an A+, at least for me. I'm not as tough as you are, though.
I think like A+++ or something. This is just a ridiculous timing, ridiculous trade. I mean, it's not like we can't create those. Yes, for sure. But this is the one that he's going to remember for some time. This is the trade that probably like a template trade. Print it out, put it in front of you, in front of your screen or something like that, and just always come back to that and mentally just rehearse this over and over again. Well, let's go through some of the interesting spots here in the analysis. I think all of these spikes are very interesting. The way how they come in, the way how the price overcomes those price levels. So this is just analytics, but this is something that we could stay here for some time. As those spikes occur, there is some selling into this trend. That produces a stop in action in itself. So whenever you see the volume spike, always constantly think that there is some selling going on there. And your task is to see if that selling is going to be observed or not. And if it's not, usually, on the next reaction or on the next test, you're going to see some kind of pullback. So that should give you an indication that there was some selling that was stopping selling. And that would bring us to the trading range. Now, at the point where the selling has occurred around here, that's the next point where we're going to incur some supply as the price comes back to this point. So your task is to assess how the price behaves when supply comes at that point. So here is an attempt to go up. We are committing above, and then we are holding above. So this is a much better behavior than what we've seen here. And even though we go down, it just tells us that they are observing supply here, they're observing supply here. So kind of like at the points where liquidity increases and where a big interest could observe that supply. Again here, and we see that demand diminishes, but still pushes the price up. So still better than at the beginning of the range. And then this obviously has a different type of behavior. As supply comes in at the same level, there is a vertical absorption and push up, 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 up. And this is going to be your typical behavior for the sign of strength where demand overwhelms remaining supply. And it doesn't require as much demand as at the initial stop in action to observe all of this. All right, well, let's come back to the trade. I mean, Franz, what about the timing of this whole thing?
After the breakout occurs on what we would call a major sign of strength rally, we get a classic test back to the top of the range, and that's, I think Dimitri was just totally astute, totally on his game, and recognized the kind of the ideal entry there, because if you look at if you really zone in on that structure right at the back, at the end of that backing up action, you get an initial attempt, you get a test, and then you get an initial attempt to move up. You get a bar that looks bearish but acts bullish, is not able to commit below the previous low, and I think that's exactly what Dimitri was looking at as his point of entry. He did have one little bit of heat that he had to take on that next bar, and that might have caused a little bit of question, but that next red bar didn't, that next selling bar wasn't able to commit below. It just came back down to the support level, and from there on, it was off to the races.
Mm-hmm.
So I think just a very, very well timed entry. What's your thought?
Yeah, absolutely. I mean, could it be more perfect? I don't know. I mean, if I'm gonna start nitpicking here, which I don't even want to do, maybe let's not even do this. I mean, like, this is such a great trade. There is no reason to, nitpick here. On the exit, so there is a local formation right here. And then the exit is right after the upthrust after distribution, which is just like so perfect. So there is first stopping attempt, retest on the exhaustion of the supply and demand, and then after the attempt to go up, the reversal and just exit. So just perfect. I like the entries that happened also after the emerged effort to push the price down, and yet, price is incapable of following through, which is a bullish indication. So all of that, all around this type of points, just correct add-ons. So just kudos to Dmitry, and just like such a perfect trade. And I love that after that we have a significant move to the downside that negates this whole move. So just a great trade. I would say like the variance on this is just like at the maximum at 100%. Any other last thoughts here, Franz? I mean, like, I don't know what else to say. Great job.
Okay, I'm gonna change my grade from A+ to A++++.
Yeah, yeah. Good job, Dmitry. All right, Franz, let's go to your trade. And this one was in Russell 2000, but you've chosen to use inverse ETF TZA, which is basically saying that if you're buying it, you are betting on Russell 2000 to go down. So what was the initial analysis here?
The initial analysis was looking at the overall behavior of the index and where it is. That's not the Russell. That's the overall market. That's the Dow Jones U.S. Total Market Index, of which Russell is a piece. But looking at where it is and kind of assessing how far we've come and the potential that this, what kind of a market are we in? Are we going to see some kind of a test? And then looking at the structure of Russell itself in that last yellow rectangle at the right, it looks, it was looking at the time that I was analyzing it, sort of like a distributional upthrust after distribution that was coming down back down to the bottom of the trading range. Yeah, we weren't able to get back up to the high there. So I felt as though it looked bearish, and then the next question is, is this the right index to be looking at? But before we go farther, why don't you
Well, let's finish with the correct selection, which I thought that yes, indeed, it is a correct selection. So we're looking at the overall market, and then we're looking at the relative strength between the overall market and the Dow, S&P, Nasdaq, and Russell. So we kind of see the underlying weakness in Russell. You could also observe this just on the comparative basis, looking at the chart. Russell, has been quite weak relative to everything what we've seen before. And then just pointing out to these boxes in yellow, what do we see here? Well, some kind of analog that it's very similar. Climactic run, first test failure, and then some kind of sign of weakness. So the key is in this area right here. Could Russell rebound? That would be bullish. If not, then behavior changes and more to the downside. Franz?
And it's the point of kind of maximum risk where you want to take on, this kind of a speculation, because if you're right, your timing's going to, show up correct pretty quickly. And if you're not, you can set your stop relatively close. You're close to the danger level, and
All right. Well, let's look at the trade itself, right?
Okay,
So
let's do it.
How did we do here?
Okay. I've got some notes up there in that blue rectangle where I noted that this was a possible place to play this was not very good timing. It was after the sign of weakness reaction had already occurred, which in TZA you're going to do the opposite. You're going to have a breakout, which happened there, and it showed up as a major sign of strength. My entry was right after that breakout, which if you look back across the trading range and you think about Dimitri's trade, he waited until whatever up action was going to happen had happened. I, on the other hand, was impulsive and didn't do that, got in at the wrong place, and then started actually looking at what I had done and saying, hey, this is not right. This is the wrong place to be in. And fortunately, I was able to get out, and I got out at a little bit of a gain, didn't lose any skin on it. But then I had to analyze, okay, first of all, where is the right place to get in initially? And it would have been at the top of the range for Russell, which would be the bottom of the range, the spring-like action here. Well, it's not spring-like action, it's an actual spring for TZA. So that would have initially been where I should have gotten in. My next trades, my entry was then going to be, okay, so after I gotten out, I made some notes to myself, which are in that upper rectangle that I've got. Yeah. So I was able to close a position at a slight profit after reviewing potential mistake. Possible revised strategy. Observe reaction from the major sign of strength. See what happens. And so I said, if it makes a higher low on whatever reversal is going to happen, then add to a probe with a stop below the LPS, which I've got marked. So, and maybe even that wouldn't have been, maybe the stop could have even been higher, just under the higher low of the backing up action. But I was thinking it could back up, it could actually fill the gap between the LPS and that breakout. So I was thinking it would back up down into there, which it didn't, obviously. So I didn't take that into consideration. So kind of a flaw in my analysis deficiency there in thinking, because we can see what happened instead of, you know, the backing up action being severe, it was rather shallow. And then this morning, the price was able to actually go up, and since then I think it's gone even higher. So where I've got those two last arrows, those horizontal arrows, would have been the ideal places to consider
Mhm.
getting into this trade again, re-entering this trade after, you know, after trading began this morning.
Yeah. Well, I think that the bias was definitely correct. I mean, like there is a continuation as we are recording this session, so yet to be determined whether this is going to turn around or this is going to continue. So again,
Mhm.
that analog, we just have to see what kind of continuation we're going to have. In a lot of cases lately, supply comes in, but not necessarily produce a lot of damage, and it's being absorbed. Now we are at the interesting spot right now where that damage could be produced. So that trade could actually work out in a much better way. So what are our mistakes here? Well, obviously, this day, if we were looking at this day, and even if we're missing the entry here, it's just, emotionally, could we come back to this trade during the day and figure out some of the late entries? So that's number one. Secondly, I think that you've mentioned this, and it makes a lot of sense. Could we see what is going on during the day after the point of entry and have the mental discipline, to see what kind of reaction we're going to see into the gap? Is it going to go into the gap? If it's going to break into the gap, is it going to have, some supply increase or not? Even if that happens, could we have a quick recovery or not? A lot of the analysis could be done on the Russell 2000 itself, just for that. But you
Mhm.
could definitely use the ETF as well. Um, and I would say also, now that I'm thinking about this, Franz, even today, you were mentioning like this would be another, 2 points of entry. And that makes sense as well. Even if this trade reverses and breaks to the downside, it still makes sense because these are the points of entry, and we, as traders, we have to engage at that point of time. All right, well, let's go through the variance. How would we view that? So bias, I would say definitely yes. What about timing?
Timing leaves something to be desired. Um, I think
Okay.
recognizing that, yeah, we'll give it a no. Um,
Character?
Character, probably a no also, since it hasn't really,
I would say maybe 50-50. Why? Because you use the analog, so there was anticipation of the down move, and it did happen. So let's give some, let's give some kudos to that, for recognizing that the price is gonna go down in Russell, and in the inverse ETF, it's gonna go up. So let's just put 50-50. Point of entry, as we're discussing this, yeah, probably needs to be better. Stop loss, which was originally here, was okay. We didn't have any add-ons, and then the exit obviously is now. So I would say something like this. What do you say, friends?
um, I agree. I agree. I think I'm seeing the picture, but my execution is
Yeah, execution.
not, it's not coinciding with what I'm seeing. Yeah.
So we're gonna have around 42% on that, and then what are your comments and lessons and the rules that you could extract from this experience?
Um, well, I'm trading small, but I still need to be, I still need to be taking my emotions, and there was definitely an emotional reaction on that breakout where my initial probe position was put on. I need to get away from that and just, think very logically through, where are we, what's happening, what can happen from here, rather than just, okay, it looks like I'm going to be right on this, and push the buy button. So that's the first kind of observation.
Mhm.
Um, and that's a process, right?
Yes, absolutely. And another thing that I want to mention here, and as we were discussing this, the timing, right? So
Mhm.
yeah, where do we go into the position when our analysis indicates, let's say, and we are correct in the analysis. So where would we in the structure do this? Well, obviously after the sprain, obviously on the test of the sprain, we can do the breakout, but then we have to allow ourselves some kind of room for mistakes, right? So even if the price goes back to the level of the support and our stop loss is much, much lower, we still have to see if there's going to be a resolution, a positive resolution for this trade. So just the timing aspect of this trade, execution, off timing was a little bit off. All right,
Mhm.
so any type of rules that you can extract from this?
Well, since my timing is, it seems to be, we can identify problems that we have, areas that we need to work on in our trading. And for me, it is timing. So I need to have extremely, well documented points of entry rules for engaging in a position. And I know what they are, and I do have those rules actually. So it's not so much having the rules, it's following the rules.
Mhm.
Um, you know,
Okay, well, let me propose to you guys something. And Franz, still, this is a good work. You know why this is a good work? Because in a lot of cases, when you had trades before, did you have an opportunity to analyze them like this? And probably in majority of cases, the answer will be no. So just doing this post-trade analysis is extremely important, and our audience is so used to this now that we've looked through quite a few trades. So one of the things that I would love to propose to you guys is to attend one of our upcoming specials. And I wasn't planning on showing this, but kind of like discussion goes into this. So go to our website, wyckoffanalytics.com, and find under the upcoming specials, Trust the Process Part 2. You don't have to go through Part 1. This is going to be enough because we're going to do a lot of the reviews. And what is this special about? This is all about the process itself. So we divide the whole process into different steps. So step number one, you have to acquire the knowledge. You have to understand how to analyze. You have to understand how the market works, or at least have a very good idea as to how you could apply specific knowledge into trading. Then you have to formulate that knowledge into a trading plan. You have to back test that to create the confidence level in yourself, and then you have to execute, go to the trading process. You could go through the selection, and then you will go through the process itself. Now, if the first four parts right here are kind of like very common, and there is a lot of concentration, especially on the first one, the knowledge, the analysis itself, then the trading process itself, once we actually get into the position, is highly underlooked. So what would we be doing there? So if you're trading stocks, you have to have a watch list. You have to create the position list out of this. You have to have some post-trade analysis on this. You have to create the variance on all of your trades. You have to create the variance on the process. Um, And you have to make sure that you are aware of all of your mistakes, like Franz and I are going through some of our trades, and we are identifying the points of interest to us, that needs to be corrected. So this whole special is about establishing that process. What this does is uh, creates focus. And if you repeat this process on a daily, weekly basis over and over and over again, and you habituate in this process, you will change your behaviors, your trading behaviors. And therefore, we have seen, like in this trade, Francis trade, it's the behavior that did not, a specific behavior based on the emotional reaction that did not allow Franz to stay in this profitable position, regardless of how it's going to develop right now, whether the price is going to go in favor of the trade or not. It's already a profitable trade. So the process will allow you to identify in the moment what are we doing correctly and what we are not doing correctly. So, and that's why this special is so beneficial. So please consider this, as a possible um, interest for you, to take on this class and just to correct some of the mistakes. Franz, any last thoughts?
Um, the last thought that I have is on the process, and American college football uh, has kind of the University of Alabama is at the top of the multiple national championships year after year, in the top 5, top 3, top 1 in the country. Their coach Nick Saban, his whole method is, he sums it up in one word: process. And it works, in college football, and it certainly works in trading. So I will be taking the course, and it's time and money well spent. That's all I have to say.
All right, well, let's do this. Let's do this together. I mean, I'm working on my own things, and you guys, the viewership of this particular series, you guys know my problems, my trading mistakes. Uh, you have to be able to see those, to recognize those. You have to be able to face them emotionally and be okay with, talking about those mistakes, and then make the next step. Next time you're making this mistake, in the moment, recognize it and make a choice. You don't have to make the correct choice if you are okay living with the consequences. So this is all going to be covered in the special. So hopefully you could guys join. I mean, I wasn't even planning on bringing this up, but it kind of like naturally went into this. Franz, thank you so much for your trade. Dmitry, thank you for submitting your trade. And as usual, guys, we would love to see your trades and your analysis. It doesn't necessarily have to be a winning trade. It could be a losing trade. Actually, a lot of the good stuff comes from our mistakes if we look into those mistakes in more detail. So send us your trades to wyckoffAssociates@gmail.com, and we will be happy to uh, analyze those. Thank you, everybody. Franz, thank you so much.
Thank you, Ramon.